Kaspa's price is under pressure, that's undeniable. The chart shows a downtrend. Volume is soft, sentiment is weak. If you're looking at price action in isolation, Kaspa looks like a failing project. But here's what price weakness often obscures: structural developments that take months or years to impact price. Price leads sentiment in bull markets. In bear markets, it often lags infrastructure development. Markets are forward-looking but not perfectly. Traders obsess over daily movements. Institutional players look at 3 to 5 year development roadmaps. When you have weak price and strong infrastructure, that's usually a setup for divergence. Price eventually reconnects with fundamentals. The developments happening with Kaspa right now: custody, mining, exchange-traded products, these are fundamentals. They're infrastructure. They're the boring, unsexy work that gets ignored by retail traders but matters immensely to institutional allocators. So, the key is, don't confuse current price weakness with project weakness. They're not the same thing. Let's start with Zodia Custody because it's the clearest institutional signal Kaspa has received. Zodia isn't some random custody provider. It has backing tied to major banking infrastructure. It operates with compliance frameworks designed for institutional asset management. It offers cold custody, insurance, and regulatory alignment. Here's why this matters. Institutional money has custody requirements. Family offices, pension funds, endowments, they can't just buy crypto on an exchange like retail traders. They need to store it in secure, insured, regulated custody. If there's no custody solution, institutional allocation doesn't happen. For years, Bitcoin and Ethereum had custodians. That was one reason they could attract institutional capital. For most altcoins, there is no institutional custody, so institutions can't allocate even if they wanted to. Zodia now supports Kaspa custody. This removes that barrier. Institutions looking for exposure to Kaspa now have a path: use Zodia for secure storage, institutional-grade compliance, and insurance. This is the first pillar of institutional adoption: secure, insured custody. Now, the price hasn't reflected this yet. The market hasn't priced in the significance of institutional custody becoming available. But that's how these things work. Infrastructure gets built first. Price follows later when capital actually starts deploying. The fact that Zodia decided to support Kaspa custody at all suggests they believe in the network long-term. Custody providers don't add support for random projects. They evaluate technological quality, network stability, and likelihood of institutional demand. The fact that they evaluated Kaspa and said yes, that's validation most altcoins never get. Now let's look at Mara Holdings because it's another institutional signal people are sleeping on. Mara is a large, publicly listed mining company. They operate industrial-scale facilities. They deploy significant capital into mining operations. Mara deployed serious hash power toward Kaspa and has mined tens of millions of KAS through industrial facilities in Texas. This isn't a guy with a few rigs in his garage. This is a multi-million-dollar commitment to industrial mining infrastructure dedicated to a specific network. Here's why this matters. Industrial mining only makes sense if you believe in the network's long-term economics. Mining is capital-intensive. You're buying expensive hardware. You're spending electricity. You're managing operations. You only do this if you believe the network will be viable years from now. When a major mining company dedicates facilities to a specific proof-of-work network, that's a vote of confidence in technical quality of the protocol, long-term stability and security, hardware efficiency and economics, actual mining profitability. Mara wouldn't deploy facilities to a network they thought was risky or unstable. They're a public company with fiduciary responsibilities. Their mining decision suggests Kaspa meets institutional standards for network quality. This is the second pillar: industrial-scale operational confidence. A major mining company, betting millions that Kaspa is worth mining, suggests the network has real technical merit. Again, the price hasn't reflected this. The market hasn't priced in that major mining companies think Kaspa is worth industrial deployment. But eventually, it will. So, the third pillar is exchange-traded product access. Valour launched an exchange-traded product in Europe that tracks KAS with full physical backing. This allows traditional brokerage accounts to access Kaspa exposure without using crypto exchanges. Here's why this matters. Traditional institutions operate within regulatory and compliance frameworks. Many simply cannot buy directly from crypto exchanges. They need regulated products. They need audited custody. They need tax-compliant structures. Exchange-traded products provide that structure. A registered investor can buy Kaspa through their traditional brokerage, the same way they buy stocks. No crypto exchange needed. No crypto wallet needed. standard regulatory framework. This opens Kaspa to an entirely different class of capital institutional pension funds, insurance companies, corporate treasuries that have strict compliance requirements. These entities cannot buy from crypto exchanges, but they can buy exchange-traded products. The fact that a regulated financial product provider decided to launch a Kaspa ETF suggests they believe there's institutional demand. They wouldn't create a product for a network they thought was going to fail. This is the third pillar: regulated access for traditional institutions. Now here's the critical insight. Bitcoin has all three pillars: custody from multiple providers, massive mining industry, multiple regulated ETPs. Ethereum has all three. Solana is building them. Most altcoins have none of them. Kaspa having all three, that's rare. That puts Kaspa in a different category than networks that are still purely retail. If you're understanding that infrastructure development matters more than daily price, you need to like this video right now. One click helps the algorithm reach traders who think in terms of years, not days. Plus, share this with other Kaspa holders. They're probably focused on price right now. They need to understand what institutional integration actually means for long-term trajectory. Let's connect the three pillars because together they form something significant. Kaspa has secure institutional custody with Zodia, industrial mining deployment with Mara, and regulated exchange-traded access through the Valour ETF. Most altcoins have zero of these. Bitcoin has all three. Ethereum has all three. Kaspa now has all three. This creates a reinforcing cycle. Custody enables institutional capital. Capital enables mining profitability. ETF access brings more capital. More capital incentivizes more mining. More mining secures the network. The infrastructure creates a feedback loop that strengthens the network structurally. But here's the thing. This infrastructure development started during a price weakness period. Nobody was hyped about Kaspa when Zodia decided to support it. The market was weak. Sentiment was soft. Price was declining. Yet the institutional infrastructure kept building. That's the signal. That's what separates projects that survive from projects that fail. Retail hype gets you attention. Infrastructure development during weakness proves actual conviction. Institutions don't care about bull markets. They care about building infrastructure during bear markets when nobody's paying attention. Then when sentiment shifts, the infrastructure is already in place to absorb capital flow. Kaspa is in that phase right now. Infrastructure building during price weakness. Eventually, price will reconnect with fundamentals. The infrastructure story gets deeper when you look at the May 2026 protocol upgrade. Kaspa's planning a hard fork that introduces native assets and covenant functionality. What does that mean practically? It means Kaspa moves beyond simple value transfer toward programmable financial structures. Native assets allow creation of tokens directly on Kaspa without wrapping or sidechains. Covenant functionality allows complex smart contract logic. This expands Kaspa's use cases. Right now, Kaspa is primarily a value transfer network like Bitcoin. With native assets and covenants, it becomes more like Ethereum, capable of supporting DeFi, NFTs, and complex financial instruments. The upgrade amplifies the institutional infrastructure that's being built. More programmability means more potential applications. More applications justify higher institutional investment. Protocol evolution plus institutional infrastructure equals a compounding effect. Again, this is unsexy. Protocol upgrades don't pump price immediately, but they expand what the network can do, which expands what institutions can build on it. Here's the final piece. Infrastructure and price can diverge for extended periods. Kaspa is experiencing that right now. Strong infrastructure development, weak price action. This divergence is normal in cycles. Bull markets are all hype and FOMO. Bear markets separate projects with real infrastructure from projects with just marketing. When you see strong infrastructure during price weakness, that's usually the setup for the biggest moves, because infrastructure attracts institutional capital. Institutional capital eventually moves price, but it takes time. It's not immediate. The infrastructure has to be built. The capital deployment process takes months. The market has to recognize what's happening. So if you're frustrated with Kaspa's price right now, that frustration is understandable, but it might also be misplaced. The infrastructure is positioning for something bigger, and price weakness is actually the opportunity to accumulate, while institutional foundations are being built quietly. Thank you for watching this infrastructure analysis. Kaspa's story right now isn't about price, it's about institutional integration, custody, mining, regulated access. These pieces matter more for long-term success than daily chart movements. Whether Kaspa ultimately succeeds depends on execution. but the infrastructure being built suggests the team and major players believe in it long-term. If you want to stay updated on Kaspa's institutional development, when the May 2026 protocol upgrade launches, what happens with ETF adoption, when price potentially reconnects with fundamentals, stay subscribed. We track institutional infrastructure developments that happen outside daily headlines. Check out the other videos on TJ Crypto World. We've got deep dives on institutional adoption patterns, cryptocurrency infrastructure, protocol upgrades, and everything else you need to understand how markets actually work beyond price charts. I appreciate you watching. I appreciate the Kaspa community, and I'll see you in the next infrastructure breakdown.